Good morning, everyone. Welcome to Coffee with Carlson. I hope you're having a great day. I hope you're enjoying this cool weather that just popped up out of nowhere. Don't worry, it's going to go away in a few days, so you won't get to enjoy it for long. If I own 100% of an S Corp, do I have to pay myself a wage? I hope a nice hot cup of strangely warm coffee is in the mix for you today. If you haven't gotten one, please do. You'll love it, I promise. A very hot topic lately, actually for many years, is the IRS trying to crack down on people who have small S corporations that are not paying themselves a reasonable wage. A specific code section says that if you are the shareholder of an S corporation and you provide services to that corporation, you are required to pay yourself a reasonable wage for the work that you perform. Reasonable has been all over the place over many years, and trying to determine what it is. The basic simple rule of thumb is if I had to hire someone else to do all the stuff I do for my company, how much would I have to pay that person in order to provide those services to the company? That's kind of a loose answer and up for a lot of interpretation. There are several court cases on this over the years, and the potential risk that you're taking is pretty large. So let's assume that you have a small S corporation. You're not paying yourself any wage at all. There is a specific box on the tax return that says shareholder officer wages. If that box is blank, the IRS continually tells us they're going to be picking your return. They're going to audit you. So if you didn't pay yourself a reasonable wage and you provide services to your corporation and you didn't file any of the payroll tax returns, any of the W-2s, pay any of the tax, you're looking at monthly penalties for all the years that you didn't do that. Monthly, quarterly, and annual penalties. Failure to file, failure to pay, underreporting income penalties. You're talking about some pretty big numbers. So it's not something that you want to do away with. I'm going to try and show you a picture of that form here. This is form 1120S for 2021. It has a line right here, line 7, compensation of officers. And you can see right here, there's a line for that, for your wages that you've paid yourself. So if you haven't put anything in there, the IRS has told us over and over again, they're going to be coming after you. I hope that worked. If it didn't, I'll show a picture in there and try and overlay it in a little while. So that's the basics for how that works, that you have to report it. You have to figure it out. We've always used this model of what you pay someone else, but there are much more sophisticated tools that you can utilize that are audit proof, not audit proof, but at least you have something to justify if the IRS or the tax court ever asks you. If you just pick a number out of a hat and you say that it's reasonable and that that's what you would have to hire someone else to do the work that you perform for your S Corp, you're really going to have a folder on that and backup documentation for us to be able to provide an auditor if it's ever actually questioned or you actually have to take it to court. If you don't have any backup or documentation, chances are you're probably going to lose that. If the number was 0, you're not putting anything in there, definitely going to lose it. If you have something in there, if you don't have any good justification for it, then you're going to hurt yourself. Now, here at Carlson Accounting, I've been doing a lot of continuing education recently on this topic, and specifically what the courts have said, what the courts require, and what some of the people that have encountered this in the past have used to justify it. So we're getting ready to sign up for some new tools that are going to give us broad ability to go through some questions with you to kind of figure out what exactly that reasonable wage figure is, and something that'll really help you and a great value added for our customers. Let's talk about the motivation that people are trying to cover when they're thinking about forming an S Corp and paying themselves salary. So the first motivation is you start out as a sole proprietorship and you start a small business and it starts to grow. Perhaps you're a realtor a few years ago and your income is starting to grow. At the beginning, the tax that you're paying, Social Security, Medicare tax, also called self-employment tax in that scenario, is starting to grow and get a little bit bigger. Also included is your ordinary income tax. So those two things combined can get larger and larger and larger as your net income goes up. So a lot of people will tell you, form an S corporation, you can avoid all that Social Security, Medicare tax, or the self-employment tax, the 15.3% for Social Security, Medicare. You actually can't avoid it altogether in a legal way. You have to pay it as long as you're providing services for your company. So let me show you some of the numbers that might come into play as you're trying to figure out where you want to go. Here I've got a sole proprietorship and an S corporation. Both of them have the same expenses, $500,000 in income, $500,000 in gross income. The expenses are all the same until you get to payroll tax and owner wages. So let's just look at the sole proprietorship world, for example, so that you can see how those numbers play out. So 500,000 in income, wages to employees of 75,000. You don't pay yourself, the officer, any wages because you're a sole proprietorship. Doesn't work. Total expenses of 189 and net income of $310,000. Your self-employment tax is going to be $27,246. That's a pretty big number off of that. And then on top of that, and I'm just using an average effective rate of 20% in this scenario, just to make the math work easier instead of going through all the formulas for the tax rate, but it equalizes in both scenarios. You're going to pay another $59,468 in ordinary income tax for a total tax hit of $86,714. Now, in the exact same scenario over here, if you pay yourself, we'll look at this first, 0 wages. So this would be someone who's going to convert from a sole proprietorship to an S corporation and pay themselves no wage. So they're not paying any Social Security and Medicare tax. This is the idea. This is what the IRS is looking for. They're looking, like I showed you in the tax form a minute ago, for that box to be 0. They're going to be calling you and they're going to want to talk to you about it. So if your total expenses again are 189 and 310, you would only pay 20% of the net income, which is $62,193. One thing I failed to mention over here is the calculation of self-employment tax. When you're a self-employed person or a sole proprietorship, you get to deduct 1/2 of that before ordinary income tax is calculated. That's why the number of federal income tax is a little bit different in both scenarios, but it does work the same way in the corporate world, because normally the employee pays half and the employer pays half. That's kind of the rationale for being able to deduct that. All right, so a little bit of difference. You would pay $62,193. So obviously there's a big incentive for someone to want to do this, because right off the bat, they're saving almost $25,000 in tax, right? So that sounds like a great thing. I want to do that, but you're committing tax fraud. So it's not necessarily something you actually want to do in practice. So I would recommend not doing that. So $24,521 you would save. So let's go in here and say that you came to Carlson Accounting. We ran a reasonable wage survey for you, and we put together good, justifiable payroll plan for you as the officer owner of your corporation. Went through the tax planning with you, which is very important. Tax planning is more important than anything else. If you're not looking at the numbers and coming by to talk to your CPA to figure out where you're at beginning, middle, or next year, you'll have no idea what scenarios are going to impact you. So a big one here is putting together the S corporation salary plan so that you have something that justifies it. But let's just play with these numbers real quick. We're going to put a $100,000 salary in so that you can see how these numbers are impacted and how much you end up saving in the end and what the cost is. So remember, $24,000, I'm just going to write this down, 24521 is the savings from sole proprietor to S Corp with no wages. Okay, is 24,521. All right, so you can see here, I put Social Security and Medicare tax over to the right, the description, so that you can see what that impact is, because the wages are still subjected to the same 15.3%, but you're going to get a little bit of a deduction to change the numbers a little bit. So let me throw the $100,000 in here, and you can see $100,000 salary. If we've come up with that reasonable figure, you're still going to save $11,000 by utilizing this scenario and this planning tool outside of what you would pay if you stayed as a sole proprietorship. There's a normal figure where we would try to come into this where you're breaking even and getting over a particular net income. But if you're starting to already have employees, then it's probably a good idea to go ahead and switch to a corporate structure anyway and put yourself on payroll. So you can see that savings this is the motivation for switching from a sole proprietorship to an S corporation without having any shareholder wages. The savings is $24,521. The savings of switching to an S corporation and doing it the proper way and paying yourself a reasonable wage, in this case $100,000, you're still going to save $11,000 in tax overall. I don't know about you, but $11,000 is a lot of money to me. I am really hoping that I'm getting all of this footage. If not, I might just do it live in the morning, but I've really been messing around with cameras and switching things back and forth, so I hope it worked out for you. So bottom line here, If you want to save some tax dollars, you need to do some serious tax planning. You need to give us a call. We have the tools, we have the expertise, we have the ability to go in and do a tax planning strategy for you. If you already have an S corporation and you're not sure if your salary is bulletproof, if you're already operating as an S corporation and you're paying yourself zero salary, or if you're not sure if your salary that you're paying yourself is justifiable and something that we can support to the Internal Revenue Service, then you need to stop on in, give us a call, schedule an appointment. We've got lots of availability. We'll be able to set you up and do this study for you so that you can make sure you're set properly. If you're a sole proprietorship and you're trying to determine whether or not you want to become an S corporation, we can also do that study and tax planning ahead of time so that we can make sure that you're making the right decision for your business moving forward. But don't forget, it's very important. If you have an S corporation, you have to pay yourself a reasonable wage. Carlson Accounting has the tools and expertise to help you determine if that's the right number. And we're going to actually be sending letters out here in a week or so, letting all of our current S corporation clients know that this service is available, that it's something that the IRS has consistently said is a hot button issue. We want to make sure that you're covered and you're safe. If you're not sure and you're not one of our customers, give us a call too. We'll be able to sit down with you and figure something out and help you determine whether or not you're in the right place with your salary. All right, that's going to do it for this episode of Coffee with Carlson. I hope you enjoyed it as much as I do. I try not to get too technical, but the technical stuff is fun for me. So I hope you guys are having a fantastic Monday. I hope you're enjoying the cool weather and the nice sunshine that we've got after that crazy storm we had a couple days ago. And if you need to get in touch with us, carlsonaccounting.com anytime. You can even click the appointment button and schedule an appointment right on my calendar. It's real time and it's always live. You can also call us at 863-382-4141, and we'll schedule a time to get with you and see if we can help you out. Thank you very much. Have a great day, and thank you for joining me on Coffee with Carlson.